Hi, my name is Marc Chapman, manager of the HI European Equity Fund. Reviewing the month of March, we see that there's been continued volatility in the European equity markets. Now, this has come from some recognition that the cyclical sectors of the market may have reached some peak point in terms of earnings. So looking at the relationship between cyclicals and defensives over the past 12 to 18 months, we've seen a clear outperformance of the cyclical sectors driven by synchronized global expansion. At this point in the cycle, it may be that earnings are peaking in certain cyclical areas, and that will lead to a likely rotation into more defensive type areas of the market. These issues have been exacerbated by ongoing concerns around currencies and trade restrictions in the wider global economy. In terms of the performance of the fund over the time frame, essentially the fund has approximately been stable during the month, and this was driven by one clear positive and one clear negative stock over that time. So first on a negative, the Micro Focus is a UK software company who buys legacy assets and improves their operating performance. They've done this many times in the past successfully. Recently, they acquired a large US company, and integration issues have led to disappointment in terms of operating performance over the past 3 months. After the first profit warning, we purchased shares in the company, thinking that the issues were well under control. However, recently, in the month of March, they warned that there were still ongoing integration problems and that these would take longer to resolve. We disposed of the position, but it caused a negative impact during the month. On the positive side, another UK company, Laird Group, performed very well during the month. This company is active in performance materials, involving replacement of plastics. It also has an automotive telematics business, which helps with all the ongoing trends in the automotive industry. Having spoken to the company several times in the past few months and identified clear value in the business, we've been buying shares since the end of 2017. During the month, the company got bid for at a large premium to the market price, which led to a large gain for the fund. The positive and negative stocks essentially offset each other during the month, leaving the fund approximately stable. Looking at the long book of the portfolio, we now think there's good stock-specific upside in a large number of these names. So if the market itself remains relatively stable, albeit volatile, then we think through delivery from the management on these individual cases, and if the plan goes ahead in terms of our expectations, then we see lots of upside on a stock-specific basis rather than on a market basis on lots of the companies we've selected over the past 3 to 6 months. The short book is now populated by individual stock names as well as some sector baskets. On the short side, given the high valuation in certain cyclical and growth parts of the European index, we've identified a number of names where we think earnings estimates have reached a peak level and where the valuation reflects the strength of the business over the past few years, which may not be repeated going forward. These companies form in the cyclical sector, some automotives, and some technology names. Overall, we retain our target of a high single-digit return with a constrained level of volatility, despite the environment. Thank you.